Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 26th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic and geopolitical environments and how that impacts the overall markets with my market analysis. I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies I find to implement into my portfolio and try to teach you what the best way is to implement an option strategy around any one of your given assumptions. All right, but without further ado, let's get on with the economic data and see how that's impacting the overall markets right now. We got new home sales and knocked it out of the park at 623,000, expected to be 490,000. Really good economic data point there because we're talking about we have really low interest rates right now. That being a product of everything going on in and around this economy with all of these unemployed people. You would expect maybe some new home sales to start pulling back again, but no, they knocked it out of the park. People are taking advantage of these low interest rates, and there's limited supply out there for these homes, and then therefore prices are starting to rise in and around those homes. So we're seeing a really strong housing market right now, despite the fact that we're talking on the other side of all of this bad unemployment data and businesses aren't opening up and things of that nature. Well, we are starting to open up, and I think that that's a lot of what we're seeing in the markets today is there is a lot of hope out there that we have maybe turned the corner on this pandemic. So without further ado, let's get on with the overall markets here. Crude oil slightly higher again today by about 50 some odd cents. We're back into that value area. I've expected this number to be a little bit high, but right now it seems like it's starting to get into a groove. We could easily see it want to come up and try to cover this gap here that we have right between $40 and $33 where we are right now. So there is a gap there. Markets do want to fill those gaps in. So we could start seeing a little bit of push higher here. $40 just seems pretty expensive right now for crude oil, given what we're seeing and people not traveling, manufacturers not really producing, and all of those things, a lack of demand and a lot of supply out there right now usually should drive prices back down. Are we going to get back down into the teens? We're definitely not going to see negative crude oil again, I would have to say, but are we going to get back into the 20s and stuff like that? I think that we might go down there and test it before really start making a move higher, unless we really start seeing some good economic data and people getting out and about. All right, gold is coming off by about $30, still in that 1700 handle. I've talked about this being the area between 1650, 1660, and basically 1785. That's going to be where the market really finds its groove and will build out some time and volume in and around there. One thing to note though, we're building out the time there, but there's not really a whole lot of change in hands there. So it's going to start signaling the lack of participation there that we could see this market really start to roll over and look to test that 1660 area there. All right, on to the bonds. They are kind of moving a little bit lower today by about a point. That's because like the Dow Jones just last I checked was up on its highs and up almost 600 points. Again, building up that volume node. Something to note here, we did get a shift in the time volume node where we have seen this shift a little bit higher. We still haven't seen that volume node move, and it doesn't look like it's going to before we probably break out of this. But I've been talking about this wanting to trend sideways as we are looking at interest rates not going any higher anytime soon, and we are going to want to stay between these. Tried to click on that. Tried to stay between basically here and build out that little volume area. So yes, we could go down and test these the 7 handle or the 70s in the bonds. 160 or 178 is probably going to be one of those low areas where we start to see a lot of support. Anytime we get down here, we start seeing some support going on. Right now, we are seeing that weakness based on flight to quality. Right now, people are wanting to invest and not miss out on this equity rally. So we're seeing a lot of money shift and rotate out of one sector into the next. But again, having said that, right here, that 180 handle, we are a point away from it. We're in the 179 handle, but that 180 handle is kind of like the target. You get a little bit too low, and that's where you're starting to see support. You start getting overextended up near that 182, 183 area, we start seeing the resistance. Therefore, right in between there is where that value is for the bonds. We're seeing it hover there. People realize that's where value is being accepted. They just are not participating by buying and selling in and around there, probably because they already have. All right, so moving on to the VIX. VIX should be coming off as it is with the equities moving higher. Just a screamer to the upside right now, 663 points, and probably, you know, a tick or two away from the highs already printed there. So every tick, it feels like we are getting a new print on the highs with the Dow Jones, as a lot of people are coming in and putting their money in there after the weekend. Maybe they talk to some friends and think that this is kind of overdone. We're also seeing a lot of these drug makers come out and start to have trials around vaccines or something to combat this virus. So there's a lot of even smaller company. Pfizer's obviously one of the bigger ones, but there are still several names out there. Everybody is racing to try and find a cure for this, and that has given the overall markets a lot of momentum to the upside today. NASDAQ, as you can see here, up 75 points, well off the highs, as we were seeing, you know, the tech sector make new all-time highs in a lot of these underlyings. I mean, it looks like nothing ever happened with some of these tech guys. They have really done very well throughout all of this. And I think that some people are starting to signal a bit of a whistle when they see that 52-week high in some of these tech names, that is a time to maybe take some profits off the table and pocket those gains. So I think that we're seeing a little bit of weakness throughout this day, as that tech sector, which has been the leading momentum driver here, some of those names are starting to pull back again for that reason. And I think that's why we're seeing a little bit of weakness there, as opposed to the Dow Jones and the E-mini S&Ps. As you can see here with the E-mini S&Ps, we got that volume node to shift higher now. So we were seeing an area where we saw this line for the volume was basically right in here. And I talked about building out this little volume node here and kind of filling in this little trough. Well, we've gotten that shift higher now. And that is pretty key, because we are above 3,000 right now in the mini S&Ps. We've gotten a shift higher in one of those volume nodes, which means price is now being accepted at higher levels. Now that's big. Why? Because people are willing to pay more because they see the value in that. And when you start seeing volume nodes shift higher, that means price is being accepted higher and really starts creating some more momentum to the upside. So now we're breaking out of that range that I've been talking about for so long. You know, it seems like a couple of weeks now that volume shift up to 3,000, price is being accepted at 3,000, and we could easily start seeing us toggle back in and around this area going forward between 3,100, maybe even 3,200, and start building out there as we're starting to see price accepted higher. Value is more expensive in a sense, and then therefore it gives more momentum to the upside. You see a switch on the downside, then that's more bearish, right? People aren't accepting those higher prices anymore. Now people are willing to pay more and are accepting of that price that builds that momentum, or that snowball, if you will. So we could be breaking out of that range that I've been talking about for so long and start to accept value a little bit higher even yet. All right. As for anything I've done, I'm just kind of sitting on my laurels right now and kind of trading, looking for opportunities to trade, but I haven't taken anything off. I've got covered calls in there. My portfolio is kind of right where I want it. And until something changes, I don't want to make any adjustments in there right now. You know, it's working. Why fix it if it's not broken at this point? I will look for opportunities to add in there, but at this point, I'm not looking to pair off anything other than the things that I already have set up with the covered calls. And say MasterCard, we could talk about. Thor Industry is one of those. Thor Industries makes the Jaycos and the travel trailers. A lot of those were out this weekend, and I think more and more people are shopping for these type of things. I've heard a lot of people talking about buying pop-ups rather than staying in Airbnbs and things of that nature. So that theory still following through. Here we go with MasterCard, up another $9 today. Now, keep in mind, I have on the 300 covered calls, so I'm out at 300 no matter what on this MasterCard trade. I have covered my full position on that at 300, so anything further higher and above from 300, I'm not making any more money on this, but I'm long at 270, and I've lowered my overall cost basis on this trade quite dramatically throughout all of this, and my break even's probably closer to 260ish or something like that. So that's where I've been able to lower cost basis by doing covered calls, selling puts, and all of those things in and around this trade, which is what we want to do. Anything above 300, I'm happy to be out, because I've talked about my trepidation with MasterCard, right? With all these people unemployed, with 20 million people plus unemployed, those people are buying on credit cards. Are they going to start defaulting on some of these credit cards? There is a high likelihood that could happen, and therefore that would hurt their overall bottom line in MasterCard. So I want to stay clear away from that. I've made that move. I'm happy to cash out of this position in the next 21 days if it continues to go higher. I'm out at 300 at this point, but I'm going to leave those covered calls on just in case. All right. That being said, that's all I'm really kind of keeping an eye on right now. Everything else is working. Travel and entertainment really doing well today. You'll see the airlines are up. Disney's up nicely. We are seeing some weakness in like Electronic Arts, where they've made those big moves to the upside and are starting to see some weakness here at their highs here. Let me see if I can't get it up. So EA Sports, you can see at near all-time highs, seeing some weakness here. It is going to probably struggle up in and around these areas as people are going to take profit, right? And I just mentioned Disney, so let's talk about the travel and entertainment. You can see it's doing well. We could probably look at AAL, and they're starting to make a bounce off of those bottoms. We've been really beaten up in there. That's still a loser in my book, but we could look at UAL, probably Booking. All of those are doing well today. So seeing a nice move higher in a lot of the travel and entertainment. You can see here up 10% in United Airlines already. All right, so that's all I got for you guys today. Check out this week's webinar. We're going to be finishing up this implementation of options into our portfolio course. I'm going to be switching it up. We're going to be doing a new course coming up right after that. So stay tuned for that, and check us out on Facebook at ProTraderStrategies.com. That's all I got for you guys, other than you got to remember we have to take a moment to go over our disclaimer here. And because we are an educational company, I am not trying to solicitate you guys on any of these types of trades. It's up to you guys to implement options into your own portfolio and doing your own homework. All right, so if you can't take that, take it easy.